Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 334 on August the 2nd, 2024. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on CleanSpark Inc., Roblox Corporation, and CVS Health Corporation, and we discuss three new trades on SoundHound AI Inc., Newmont Corporation, and the iShares Trust 20-plus year Treasury Bond ETF. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on the show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the equity markets in the United States finished the week 2% lower. The Dow Jones Industrial Average fell 852 points, closing at 39,737 points on Friday. The S&P 500 index lost 112 points, ending the week at 5,346 points. Now it's time for the topic of the week. The topic of the week is the Olympics. We are one solid week into watching the best athletes in the world compete for a spot on the podium. Of all the millions of athletes around the world, 3 of them will have the shot to be on the podium. Only one of them will walk away with the gold medal, unless, of course, it's a team sport. Now, what's not shown are the minutes, hours, days, weeks, months, and years of practice in order to get to that one moment. I love watching men and women's gymnastics. When I was in college, I attended a university that only had a club gymnastics team. This was great for me because it allowed me to work out with some of the guys that grew up doing gymnastics. I learned how to do a number of flips and have some fun on the various apparatus. One thing is certain when you do gymnastics: you will fall. There are times in the gym when I would go in fearing the possibility of falling. All of the gymnasts that you have watched do amazing things have fallen dozens of times, if not hundreds of times, learning to do each of the skills that they're performing on stage at the Olympics. Everyone falls. The sooner you acknowledge that falling comes with learning, the sooner you push through and learn. You might ask yourself, how many times do I have to fall in order to be as good as one of them? That's actually the wrong question. The better question is, how many times do you need to get up to be as good as one of them? Now, without going into full motivational speaker mode, let's tie this into trading. I cannot tell you how many losing trades I've had in my career. It doesn't even matter. It really doesn't. I can stand here today and show the financial and mental rewards from continuing to trade. If you're having a slump, you might ask yourself, how many bad trades do I have to go through before I need to get to a good one? Of course, that's the wrong question too. The better question is, how many times will you get back in the market to learn how to trade options successfully? Watching the Olympics inspires me to be better at everything that I do, including trading. As you watch the athletes in the upcoming week, I hope you see the parallel in your own trading. Keep going, keep getting up. That is the way to become successful. So that's it for the topic of the week. And it's perfect because this is one of those weeks where the trades didn't go as well as we would have hoped, but hey, tomorrow's a new day, and we just keep on going. So we're going to start off with a covered call on CleanSpark Inc. Symbol C as in Charlie, L as in Lima, S as in Sierra, K as in Kilo. At the time, the stock was trading at $17.12 per share. I looked at buying that stock and selling the August 17 half call at $1.75, hoping for a return of 12.44% in 3 weeks. Well, shares of CleanSpark fell $3.64, ending the week at $13.48 per share. The call option that we sold lost $1.57, leaving us with a net loss on the week of $2.07 if we were to close the trade out immediately. Now, we do need some triage here. I'll look to roll the strike of the call lower to collect some more premium. I always want to consider the price of the call option plus the difference in value between the stock price and the strike of the option, just in case the stock rises and we exit out of the stock position at the new strike price. Right now, I'm looking at buying the August 17.5 call back and then selling the August 15 call at 72 cents. If stock rallied to $15 per share, we would have our shares assigned and we would keep the price that we collected to sell the option. This also will set us up for selling another option against the shares next month. Now, I used to worry far more about these covered call options. I worry much less about them now, to be honest. I'm typically happy to keep selling call options until I fully recoup my loss and possibly even lock in a profit. So I like rolling the strike lower. I want to make sure that whatever strike I choose and the amount of money that I collect for selling that new call option, that once you do all the math, if stock ends up rising again, I'm actually going to recoup my loss and possibly make a profit. You don't want to put yourself in a position where all you do is simply lock in a loss to get out of that stock, because if you continue owning the stock, you can continue selling call options next month and maybe the month after until you collect enough money to make this trade profitable. So that's it for the covered call. Let's go ahead and look at the credit spread from last week. We looked at Roblox Corporation, symbol R as in Romeo, B as in Bravo, L as in Lima, X as in X-ray. At the time, the stock was trading for $40.50 per share. I looked at selling the August 40.39 put spread at 39 cents, which could give us a maximum possible loss of 61 cents per spread. Well, shares of Roblox fell $1.47, ending the week at $39.03 per share. The out-of-the-money put spread that we sold is almost fully in the money now. So let's just take a moment and acknowledge that if you'd actually owned the stock, you would have lost $147 this week. Instead, you sold the put spread and your maximum loss is $61. You could sell the August 40.41 call spread at 19 cents to create the iron condor. Of course, that would lower your maximum loss to 42 cents, but it would also increase the likelihood of losing money overall on that trade. Now, I'm still expecting the market to bounce off of these closing prices next week, so I might wait for a little more clarity in which direction the stock price is going to head over the next couple weeks. Remember, I don't have to rush to make any adjustment because my loss is maximized at that 61 cents, or that's $61 right now. So if I do nothing, my loss will not increase from there. That's why I like spreads. And if I want to make an adjustment, I just want to make sure that the adjustment that I make is going to lower my risk and ideally increase the likelihood of making a profit. So that's why I always say do the math, because if you do the math, it might save you from making a bad decision. Our final trade from last week was a debit spread on CVS Health Corp, symbol C as in Charlie, V as in Victor, S as in Sierra. At the time, the stock was trading for $61.01 per share. I looked at buying the August 60.61 call spread for 60 cents. That gives us a maximum gain of 40 cents or a 66.67% return in 3 weeks. Now, shares of CVS lost $1.71, ending the week at $59.30 per share. The in-the-money call spread that we bought is now out of the money. There's still 2 weeks left until expiration, and we still have a chance to make an adjustment to this trade. Now, just remember, we have a capped amount of risk right now. We cannot lose more than what we put into the spread, what we paid for the spread. Now, we could sell the August 60.62 call spread at 62 cents. This would allow us to recoup all of the money that we paid for the initial spread and leave us with 2 cents of possible profit. It would also leave us short the August 61.62 call spread at 2 cents, meaning if the stock rallied to $62 per share in the next 2 weeks, we would lose 98 cents or $98 on this trade. So doing nothing means risking 60 cents. Making the adjustment changes our risk profile significantly. Of course, it also does increase the likelihood of making a profit on this trade since it's so far out of the money right now. But it's my nature, honestly, to wait a day get more information. I want to see what this stock is going to do in the coming week, just to give me more of an idea of which way it's going to go. Because I don't want to lock in a loss or increase the likelihood of a large loss. Now, someone else, of course, might want to handle the situation differently, and that's the beauty of trading. Even if you start with the same trade, you might get a vastly different outcome based on how you manage the position after the trade. So that's it. Those are my thoughts on these trades for the week. I love it when you guys email me. Feel free to let me know how you like to manage these trades too. This doesn't have to be a one-way conversation at all. Let me know what you do in these situations as well. I share my adjustments every week. I'd love to hear yours too. All right, so that's it for the trades from last week, the review of last week's trades. We're going to go ahead and get into the new trades for this week. This is the last week that we will be looking at the month of August trades. All trades on today's show use the August 16th expiration for monthly options in the month of August. So next week, we'll start looking at September options. So for this week, let's go ahead and dive in. We're going to start off with the covered call on SoundHound AI Inc. Symbol S as in Sierra, O as in Oscar, U as in Uniform, N as in November. The stock ended the week at $4.63 per share. I'm looking at buying stock and selling the August 5 call at 30 cents, hoping for a 14.47% return in 2 weeks. Now you enter this trade by buying stock for $4.63 per share and selling the August 5 call at 30 cents. This trade makes the most money if stock prices finish above $5 per share. The break-even price on this trade is $4.33 per share. In real terms, the stock purchase will require $463 and you'll collect $30 for selling the option. Next up, we have a credit spread on Newmont Corporation, symbol N as in November, E as in Echo, M as in Mike. The stock ended the week at $48.50 per share. I'm looking at selling the August 47.5 put spread at 15 cents. That could give us a maximum possible loss of 35 cents per spread. Now you enter this trade by selling the August 48 put at 99 cents and concurrently buying the August 47.5 put for 84 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $48 per share. The break-even price is $47.85 per share. In real terms, you'll receive $15 per spread that you sell and have $35 at risk. And our final trade on the week is going to be a debit spread on the iShares Trust 20-plus year Treasury Bond ETF, symbol T as in Tango, L as in Lima, T as in Tango. The stock ended the week at $98.28 per share. I'm looking at buying the August 97.5, 98 call spread for 29 cents. That could give us a maximum gain of 21 cents, or that is a 72.41% return in 2 weeks. Now you enter this trade by buying the August 97.5 call for $1.88 and concurrently selling the August 98 call at $1.59. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $98 per share. The break-even price is $97.79 per share. In real terms, you'll pay $29 to enter the spread, and your maximum gain is $21 per spread. So that's it for this week's show. Thank you guys so much for listening. Thank you so much for sharing. Thank you for just being awesome. Seriously, you all are awesome. It always blows my mind when I look at the statistics and I see all of you having listened to the show. I love it. Thank you so much. I feel the love. Thank you for the emails. Feel free to email me if you have any questions. You guys have a wonderful weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.